Hello and welcome to this week's edition of Invest Africa. I'm Alicia Seckham. Well, the World Bank's Doing Business report for 2013 looks at the ease of doing business in a particular country. Out of the 185 countries globally and overtaking Kenya, Uganda ranked number 120. But the country dropped one place in that ranking, citing cross-border trading as its Achilles heel. This week, we take a closer look at the opportunities and challenges that Uganda presents when doing business in the East African country.
With a total surface area of roughly 241,000 square kilometers, the East African country of Uganda is home to some 34 million people. In a bid to move the country towards economic prosperity for the people of Uganda, the country is focusing on providing a conducive investment climate through macroeconomic policies aimed at modernizing and growing the economy. The oil sector is one of its key drivers.
The country is a number one performer on the FDI attraction side. There's about 1.2 billion US dollars worth of FDI coming in, mainly driven by oil, and the oil sector. So that is expected to drive growth there.
But to ensure the long-term economic growth, Uganda will need to do more to improve its cross-border operations.
By focusing our programs and projects in improving infrastructure like railways, roads and telecommunications so that we reduce the cost of doing business, but also by enhancing agricultural productivity as well as manufacturing.
According to the World Bank's Doing Business 2013 report, exporting a container of goods from Uganda requires the processing of 7 documents and at least 33 days to reach the destination. This at a cost of 3,050 US dollars or 7.9 million shillings. Importing costs can also be as much as 3,200 US dollars or 8 million shillings. The main challenge of integrated countries such as the ones in the East African community is the comparable infrastructure. Therefore, initiatives such as the development funds for the regions will go a long way in not only ensuring that the country transforms into an attractive investment destination, but that the region as a whole becomes a market for those looking to do business on the African continent. Tumisho Mahanyele, Johannesburg.
Well, joining me in studio this week to take a closer look at Uganda as a business and investment destination is Stephen Sutherland. He's Sales Director for Africa Fleet Services at Mix Telematics. Alan Mutono is the MD of Mutono Technologies, and Kayize Matovu Kasozi is the Councillor at the Ugandan High Commission as well. Gentlemen, thank you all for joining me today. And let's get straight into conversation now, because if we start off with you, Alan, looking at Mutono Technologies specifically, you've got operations in Uganda, but that spans to Johannesburg, Bloemfontein, Hong Kong and China as well. How do you rate doing business in Uganda?
Well, I can't come up with a rating of a scale of, say, 2 out of 10. I can still put at 5 out of 10. Essentially, Uganda offers quite tremendous number of opportunities. Likewise, in all the other countries where we do business from, particularly in South Africa, where we actually base our head offices here. However, it's always worthwhile we find worthwhile to put our effort there because of the returns. We get better returns on our investments or on our efforts within the country. We mainly operate in providing systems for government, operations. And over a period of time, obviously, you come across a number of challenges, particularly when we go to Hong Kong, we're able to operate more smoothly. And then in South Africa, it's still a bit similar. You get a lot of systems that you can always access, offices to go to, then you predict what's going to happen a week later. And then when you go to Uganda, we're still growing. We're still putting up a number of systems. The roles are still being drafted. So there's always a delay This is the delay. But
we will be getting into the challenges of doing business in the territory. For now, Stephen, I mean, Mixed Telematics, one of the businesses that has not only set up shop in Uganda, but it's chosen the territory as its headquarter based for the rest of Africa operations for the business. So what was the appeal there? Because we had Alan highlighting better returns, certainly standing as one incentive.
I think within our industry, being as close to your customers as possible is quite essential. Any delays in getting anything with regards to hardware and services is just going to position you very poorly with your competitors. We also learned, we've been doing business in Africa since the early 2000s, and we've learned the only way to get to know your market is to be in your market. So it was very important.
So prior to this, you were operating remotely with South Africa as your home base?
Absolutely, very much on a remote control type basis, which means you couldn't really have a good relationship with your market. So the picking Uganda was done through quite a bit of self-searching and quite a bit of research, which I'm sure we'll get into a little bit later. But again, it's geographic positioning. So we're looking at it, we're running it for our East Africa community operations, which was a good contributor from the African side of things. And so positioning ourselves there to get a better footprint and solidify our position there was important.
Mm-hmm. What sense do you get of foreign investor sentiment towards Uganda and the business environment right now? Because when you look at that East African region, Kayiza, it's often Nairobi in Kenya that stands out as the business hub in the East African region.
Well, it shows that we still have a lot of opportunities, because if you go into a market that's already close to saturation, then you're bound to start with a lot of competition. If you go into close to virgin territory, I wouldn't say that Uganda is virgin territory, but there are still many more opportunities to exploit in Uganda. Therefore, it places us at an advantage in that we are offering, first of all, more incentives, because we are bending over backwards to ensure that we to get...
Let's get specific there. I mean, what kind of incentives? When you say you're bending over backwards, what exactly are you putting on the table for investors to entice them your way?
What we'll do, we'll ensure that if you come to invest, if you want to invest in Uganda, you have a one-stop shop. That is the Uganda Investment Authority, where most of the activities will be accomplished. We offer incentives like tax holidays, first arrival privileges, a waiver of withholding tax on capital goods, things like that, to ensure that if you are looking at ways of keeping your costs of setting up low, then you look at Uganda.
As an investor in the Ugandan territory, Stephen, I mean, what's your sense of doing business in the territory from a regulatory perspective? Just how easy is it? Because as I said, we've got Uganda currently ranking number 120 out of 125 countries that are assessed by the World Bank.
I think as far as ease is concerned, we measured it, and when we first looked at it, we looked at somebody who had a tax legislation very similar to our own. So it wasn't as if we were going to something completely foreign. I think, yes, we would like to see things made a little bit easier. What we cannot complain about is efficiency. The URA is probably one of the most efficient revenue authorities that we've ever had to deal with. But yes, I think where we would like a little bit more focus is obviously on the import VAT. You don't always get it back, which does put a few cash constraints on your cash flow within your business, especially for startups. And if we can have a look at something like that, that would definitely be a good way forward.
Of course, when it comes to any African territory, Alan, we've got investors constantly looking at the macroeconomic scenario in the country and then political stability, just where we stand in that regard. And in both those instances, I mean, we've had Uganda, for example, boasting stability in inflation that stood at single digits over the past 10 years. GDP growth rate sitting on average at 6% per year. So good macroeconomic stability coming through. What about the political side of things?
Well, politically, the country is very stable. We haven't had any serious wars since 2005 when the bandit colony left the country. I mean, when it was pushed out into Central African Republic. So, however, when you quoted earlier about the report from the World Bank, and there are several reports out there that will paint a different picture from what might actually be happening. Steve mentioned that to get to know your market, you've got to be in your market. Mm-hmm. When you look at Uganda above the rim, when you look at it in the figures and what institutions say about the general economy, you will miss the picture. The best picture is actually on the ground. Many companies, South African companies, have found to their surprise. I will mention names, ShopRite, Standard Bank, and MTN, and several others. When they go in, they expect a growth rate of, say, 2% or 3%. But within no time, their infrastructure is under pressure with the demand that comes in. Because most of Uganda is a lot of activities are very informal. Mm-hmm. People work on a cash-to-cash basis. If you ask someone to deposit money for you, it may take a while. But if you say, I'm coming to fetch it or can come and pay it, it's faster that way. So that trickles into a lot of your operations. And just to emphasize the point is that there is a lot of potential, and you have to get in there, interact with people on a daily basis, interact with them on a daily basis, see what they eat, how much fuel they use a day, how much airtime they use, and then you get a clear picture.
Are governments putting the systems in place that afford them to leverage off the opportunity, off that opportunity by putting the right incentives on the table for investors? And I ask the question because about 3 years ago, a comment was made that Uganda's hazardous business environment stands as an impediment to foreign investment in the country, especially where you've got mixed signals about government's commitment, and policy as well. It's a problem that we've seen surface in South Africa as well, and we've seen just what kind of an impact that can have on investor sentiment. To what extent is that still a concern for investors wanting to operate in the territory?
It is a big concern. There's a lot of business risk, mainly brought through by the imbalances that you find in the rivers of business. For instance, the tax or the reigning financial system. As well as there's always a specter of corruption hanging over everything that goes on. And then when you put it all together, if you compare how investment will fare in, let's say, in South Africa or in a quite developed place like Hong Kong and in Uganda, Uganda will come up short because of that. But as you also know that in these two countries I've mentioned, the margins are always lower in whatever you do. And yet they will be higher in Uganda, where you may score up to 50% return on your investment, but with more risk. However, the government has also done quite a lot of work. There's the Investment Authority, which is a one-stop center, where you, instead of going through 7 or 8 different institutions, you go to one and you do all the rest of the work for you in the shortest time possible. That is coming through. There's still a lot of room for improvement. You get across instances where your shipments will be delayed at the border for 4 weeks, and then you might have to push what they call push the envelope. And again, it also comes to how you get into the market. If you come in with a view that you're going to push the envelope all across the road, then you're bound to fail. If you come with an ethical perspective and say you want to push the envelope, you use systems, then eventually the systems come towards you.
Of course, that drawing to an extent the spotlight to efficiencies in a system. Straight after the break, we take a look at some of the other incentives that come along with doing business in the East African territory. And a part of it is the fact that Uganda is part of COMESA, and members within that COMESA bloc actually enjoy an 80% tariff reduction operating in the regional market. That's guaranteed, and certainly it attracts investor attention. There's more on Invest Africa when we return, so stay tuned.